To the economy now. After a wild week on Wall Street, new information now that indicates it could be another bumpy ride when the markets open on Monday. June is expected to end with its worst monthly percentage decline since September 2002. Ouch. One key issue tanking the markets, rising fuel prices. AAA reports the national average for a gallon of regular at $4.07. Well, Gary Hager, he's a financial analyst, and I want to say good morning to you.
Good morning.
Thank you for being here. Can you tell us, if you have a crystal ball, where you see the price of oil going? Where's it heading?
It's heading higher. Oil at $140, give or take, a barrel right now is probably about halfway to where it will be in the next 5 years or so.
Okay, wait, hang on. You just said halfway to where it will be in the next 5 years. You think it's going to be pushing $300 a barrel 5 years from now?
It's very possible, yes, given global demand. Well, it's global demand. It really is demand. The thing, though, that's occurring with oil, which people need to realize, is it's moving too fast, too far too fast. So people are now talking about oil being in a bubble and that oil is going to come off $20 or $30. Oil could do that. But the amount of insatiable demand, both in the United States and abroad, is going to drive the price of oil that much higher. And it won't be just because of speculators. It'll be because of real need. Oil is not just used for gasoline. It's used for many other products that we need, plastics, for example. So will that change? Will America and other countries ramp up the green side of industry? Probably. But I still think that there is a much higher price of oil down the road.
Gary, I'm certain you're not the only person who thinks like this. So I guess my next question, is that why we are so precariously close, if not already in a bear market right now?
We are absolutely in a bear market right now, in my opinion. In January, in our letter to our investors, we said that the U.S. economy is in recession. Whether GDP showed it or not, we really felt very confident that the feel on the street, that the people are saying by their pocketbook that we are in recession. So is oil the main catalyst for this recession? I think it is, actually. When you have such incredible increases in prices in one particular very vital commodity, you're going to have people cut back in other areas. And what happens is you have just a piling on effect. So people today absolutely are looking at their pocketbook a lot more closely, are not taking as many trips. And when they look at the price of oil, the price of gasoline, as they're traveling, they're saying, what are we not going to be doing next weekend? Where are we not going to be traveling to?
Is there a bottom to this market that you see?
Well, speaking about the equity market, there's always a bottom. The question is, where is that bottom? Right now, technically, the Dow and the S&P are in precarious territory. Our opinion not very long ago was that the Dow and the S&P were probably going to suffer double-digit declines this year. We don't believe that that has changed. So I would say right now, not that I'm looking to predict specifically, but I believe that the Dow will test 11,000 possibly this week. Short week going into the July 4th weekend, volume will be low. And there's something called the July 4th rally that happens a lot. I just don't think that's in the cards right now. I think there's a little bit more need for capitulation, for people to basically throw up their hands and say, that's it, well, I'm getting the heck out of here, before we reach an interim bottom on this market. Okay.
Gary, we're going to have you with us throughout the morning, which I'm glad to say. Gary Hager of Integrated Wealth Management. Are you New York or New Jersey based?
We're in New Jersey, Edison, New Jersey.
Good to know. Well, we'll talk to you next hour again. Thank you so much. Many more questions for you.